Friday, September 6th, market analysis, Stan Ehrlich. Good morning, 10:16 California time. And boy, is this week been a really big down week. As you guys know, for the last few weeks, I've been expecting this, not necessarily this much this quick, but this is a classic, basically downside breakout. I got two sell signals in the E-mini during the process. Neither one of them worked particularly well or had small losses one way or the other. But during the topping out process, like I've said innumerable times, I sometimes get these and they're not necessarily the highest high, although frequently they are the highest high or the lowest low for the break. We got a bottom in here, et cetera, et cetera. I'm going to cover, by the way, this morning, the October lows in substantial detail from 1993 to date. This is what I've been waiting for, the market to top out in August or September, oftentimes September, like it starting, and drop into October where it frequently turns around, sometimes for a very modest rally, sometimes it's unbelievable. And we'll get to that in a few minutes. Tierra del Fuego, here it goes, heading south, land of fire, slang for South America, southern tip of South America. Almost oversold, by the way. So after this break today, maybe Monday, Tuesday, Wednesday could be a bounce. But it's not going to be very far. It's not going to last very long, and it's not going to be that much of a bounce. And then I expect to see maybe by the end of next week or sometime next week, new lows for the trend. It could be on Monday and then we bounce. But we're fairly close to it. Next chart. Going to be the 5-minute, 1-minute chart on the E-mini. We're bouncing a little bit up to a resistance right now on this 1-minute chart. And you can see after that government report this morning at 5:30 California time that looked like it was going to end up being a bullish report, was taken initially as being bullish on the average for a while. But I continue to say markets move on anticipation and reverse on realization. One of my favorites. Came up with that, I don't know, a few decades ago. So we all are expecting interest rates to be lowered by the Fed, maybe 2 or so times by the end of the year. They haven't got a lot of time left, you know. We got September, October, November, December. That's it, 4 months. So twice, I'm thinking. But that's built into the market already. And it went up a lot in anticipation of that. Now we have, for the most part, a very likely, exactly what we're expecting situation. And the market already went up a lot in advance. Typical, not unusual at all. This is what gets people into big, big trouble if they don't understand market movements. They get bullish smack dab on top because of the bullish news, but it ends up being the last piece of bullish news. And from then on, or a while longer, it's not as bullish or outright disappointing. So another few weeks into October and then back up. Now we're going to go to the spider. And I'm going to go to the 30 October lows cycle. After I'm looking at the spider daily data chart, and this is a double top, we came very, very close to the highs that were made back on July 16th, and in some cases July 11th, but not for the SPY. It was July 16th, right in that time frame. Down to a low, which was the minimum downside objective on that head and shoulder bottom. That worked great in 3 days. I have to also point out, if you haven't noticed already, volatility has picked up a lot. And that's classic for bear moves, which I think is going to continue for about 4 more weeks, 5, something like that. We're short from the bearish engulfing August 22nd, and we still are. It is doing fantastic. I'm probably going to start lowering this protective buy stop a lot closer to current quotes, but that's playing with the stop. You can do that. I don't necessarily encourage it unless you know what you're doing. Now we're getting very close to oversold and getting close to a support area, so it is likely to bounce, like I said for the others. Here we go. Okay, first of all, I'm going to go to the spider 5-minute chart support area bouncing off of right now. We're down 9, 10 points, 8, 9, 10. We're down 9, 14 right now. So if the bounce is even as much as 5 points, you're still making new lows, done. New low closes for the move down, done. And that's a 5-point bounce. I mean, you're going to have to rebound a lot here in order to change any technicals. Short term may be a small bounce, like I said, and it could be a few points. All right, October lows. Let's drag Ninja Trader over here. And I'm starting in 1993. There was a buying opportunity. You can't see very well because of the price scales. Do you remember when it was trading at 46? That's true. For the S&P, October 8th, the top bottomed out. I'm just going to go with the word October. And these are the exact dates I have picked, and they're blatantly obvious in most cases, and not necessarily in some cases, but they're basically the lowest low during October. October 1994, 95, October 96, October 97, October, and we're going now into 2001, September 21, relatively close to October, but in September, so it didn't work. Premature. October, another September 30th, again, a little earlier than expected, super close, 2003. October. And we are up to October 08. October. I'm getting tired of this. October. September's the third time. September 29th, almost on October, but not quite. And as you can notice here, and you can go reverse the video, play it back. Here we go. We're getting close to current, almost current. September, we just saw that one. That's the third one. And last, October 16, October 17, 18, October. And now we're about to see the currents. This is October 13th to 22, the bottom of a bear market move for a whole year. A big downside correction to the exact middle of October. Unbelievable. Plus, it was a head and shoulder bottom at the time, and it had an ER buy signal on October 13th. My system picked the low day of this bull market to date, which is up to date right now, current tick, et cetera, et cetera. Last October was last year, of course, October 27th, 23, and wow, another whopper. Will it be as profound as last couple of years? Oh boy, I sure hope so, but I'm really stretching it here. My minimum downside objective is basically a test of the lows that we saw in August, just last month. But I'm not sure that that's going to work. And if those are broken, then I've got myself a double top formation and a minimum downside objective, probably in the ballpark of this support area. Let's call it 460 to be, more refined exactly as a little bit of time passes. So there's your 3 mistakes out of 30 plus years since 93. And that's better than 90% of the time. Let's go back to our current indexes. Whoop, let me grab this on the other monitor. I've got 3. Okay. And goody. Let's drag it down a little and resize. Okay, good. So, right there. A bounce. Looks like it actually is starting, but I don't trust it. I wouldn't be surprised to see new lows. But, look at the size of that thing. Also, look at the RSI on this 5-minute chart. It got down to 11, and that's a 5-minute. When it gets down to the 10 approximate level, it tends to bottom out like that for a pretty decent bounce. It didn't last long. That pretty decent bounce. It really didn't last too long. I'm looking at 5-minute data here. Back here, got down to about 10. Excellent bounce, and it gapped up a little. But that's the point. So I'm not going to be surprised to see it bounce here 2, 3, 4 points on the spider. Next chart is the QQQ. It also is now oversold. First time since beginning of August, down there. And it's banging into support. Time for a bounce. Not too far, not too long, then new lows. Short-term chart, we're still short this trade from this ER3 entry, but I've shown this, I believe, almost every day since we got short, which was on August 23rd. So it's a whopper of a trade, as you can see. Just doing fabulous. Came down to the support area. Let me get my cursor back. It sometime is not. Okay, good. So I like the support area it's bouncing off of. I should have pulled this to the right some more. Sorry about that. Just about like that. Yep, that's the way it should be. And a bounce. No surprise. Next chart, NASDAQ futures, daily data, also bounced against a support area, not very accurately, but got for the first time since a month ago oversold. Time for a bounce. Not very far, not very long, et cetera, et cetera. Now look at the NASDAQ futures, really big break. Came down to a support area, but not particularly accurately. Well, I like what I see. Starting to bounce pretty good. Again, what am I thinking? Probably up to 18,817 or maybe 18,863. That little yellow zone. Next chart, going to be the, come on. The YM new lows also. Not really at any particular great spot for it to start bouncing. Not oversold yet either. It could work a little lower, but this is a double top formation. There's your red dot, line connecting the highs. They're almost the same. Now, if that's true, the low between the two highs being around 38.6, well, let's call it 38,700, aren't going to hold, and it'll go all the way down to 35,475-ish. My minimum downside objective on the double top. So I like what I see. I'm quite bearish. What was that here for? I'm not sure why I put that there. Yeah, that's just going to erase that one. I like this one better. So I might adjust this a little bit as time passes, but it's in the ballpark, definitely. Time for a bounce. Very oversold on a 1 minute, but not that bad. This is the least likely to bounce of the indexes. And we're going to the Russell. Not quite oversold, super, super close. Actually, it may have even touched it. Got down to 25.61. Nope, not 25 or less. So not quite oversold, but there's a bottom of a support area right here. And time for a bounce almost. Yeah, same comment. Now, bonds. Remember, I'm looking for a break all the way down into this green circle. That is during October, and the levels are 119.5 to about 116. I'll raise that just a little bit so it is 116 and a few ticks. How about that? Good. Doesn't make much difference. Double top right now. Barely holding on to some modest amount higher for the day. Bumped against the bear trend line. I like what I see so far in terms of it being a top. From here, I'm expecting it to go down, break these lows at 122.5, and dribble back and forth. Not any kind of a crash, I don't think, but end up bottoming out. Anything in this green circle would be great. 10-year notes. 10-year notes have an outside trading range day with it being only up a tiny bit at the moment. 15 ticks. So if it turns out to close lower on the day, losing all 15, 16 net higher, we'll have a red sell signal on the second high of what is very close to a decent double top. Not quite. I have to think that, yeah, it probably looks good enough, but I've seen a lot better. Bonds, they're right up against almost the previous high, very close. 10-year notes, not quite, but still qualifies. The green circle's there, no change. During October, I'd love to be right smack dab in the middle of the circle for the bottom bullseye. I don't think that's going to happen, but we'll see. Downside breakout. Oop. TradeStation took over. Let's go back. And here we go. I'm sorry. Now, downside breakout in crude oil. Downside follow through now 2 days after the breakout. Hits support and got oversold just barely below 25. Time for a bounce. Not very far, not very long, bump against resistance above the market. This is actually potentially quite bearish. We are breaking out of a very large, a year and a half pennant formation. That's pretty big. Normally pennants are a few months, couple of months, 6 months, maybe a year, but a year and a half, that's pretty damn big. Okay, next, natural gas. Buy signal at the bottom of the market, great. August 28th. Another one a few days later, great. Another one yesterday, great. New highs by a minor amount today, up a little bit on the day. Okay, it doesn't have to go straight up. As long as it doesn't go down too much too long, I'm happy. And I'm thinking it's starting to go, but a little slow. After all, this is still a bear market. What can I get out of this? A test of resistance. Let's call it 2.5, maybe up to 2.6.5. Now, the upside objective, if you like to call this a double bottom, and it's certainly shaping up to be, that would be an upside objective of 2.88, which would be, pretty decent rally. But again, I don't even think that's going to change my long-term opinion about being neutral to bearish, but plain bearish. Next, heating oil. Oversold now, first time in a while, in a broad area of support. Can't seem to come up with a particularly great idea as to where the thing was going to actually bottom out. Yeah, this support area is just filled with a variety of spots. So I'm not going to come up with something except oversold at the moment. Next chart. We still have a high day, bearish engulfing on gold. Today is a bearish engulfing. Outside down day is the old phrase, or key reversal, bearish key reversal, before candlesticks became popular around 1985 because windows turned into color and we started to buy color monitors. Everything before that was black and white and green screens. What I started out with, my Apple II Plus and Apple IIe in 77. Okay, so gold is about to hit the dust. I think it's about to break into new lows for about 2-3 weeks and start a move down that might last a while. I can't really come up with a formation. We just simply stopped at this trend line, and that is what's called a bullish resistance line. Bullish because it trends up, but resistance because it's trading under the line. Now, this is a support line because we're trading above it, and it's trending almost flat, but a little tiny bit lower. So it's kind of bearish, but you can call it just flat support line. That's going to mark off major support. And if you don't hold 2180 downside objective from this big sideways trading range, gold. Now, platinum and silver are still doing great on my head and shoulder top. I've been talking about since, it had to be about this date right here, July 17th. Probably I started screaming bloody murder about a move down to, my minimum objective 24.5. We got a bottom, perfect. We got a rally out of it, just fine and dandy. Could have been a little bit more, didn't want to. I thought it was going to stop a little bit short of what it did. Now today is almost a bearish engulfing, not quite, but we did make a minor new low here for about 3 weeks, and we're not far from it. It looks like a new low close likely for a few weeks. Support's not going to hold. We're going down, I believe, to 2450. And what about platinum? Same formation, same story, minor differences, has already made new lows for the trend, bouncing a little bit off of oversold conditions. I don't think it's going to go very far. In fact, that could have been it today's high, now lower than previous day's close. Yeah, I wouldn't doubt it. Copper, totally different. Close to the bottom, got a buy signal. Worked out okay, not great. Yesterday, we got another buy signal, not quite as low as the other ones, which were around the early part of August, but fairly close. And at the moment, not doing that well, but we're only the day after the reversal. Not, yeah, we got stopped out already with the current kicker. So I may play with that and tell you that I did and why, if I do. But at this kicker, did have a day trade loss at the moment. But the signal low is still the lowest low. Next chart, almost the lowest low on green bullish engulfing ER buy signal. Today, we have a bearish engulfing. Now, just because I've got a sell signal does not mean we get out of our long. We're still long. What it does mean is that it's likely to hit our sell stop. So I probably should raise the sell stop. Maybe not. Maybe I'm satisfied with the profit I'll take at that number, 99.6. I'm long at 97.974 and a 3/4. It'll be a nice profit. I could make more if I got out right now. But discipline, discipline, discipline. If you mess around with your trailing stops by changing the strategy, changing the code, changing the inputs constantly, you're not following any disciplines. You're going to have a hard time duplicating a track record, et cetera, et cetera. Generally, leave them alone. But bearish engulfing today, I think it's going to hit the dust here in soybeans. What about soybean oil? Already started to slip. We did have a good trade. We made a little money in the soybean oil, got out a few days ago, and now we've got a new low. I keep mentioning I'd like to get bullish on grain markets with any significant longer term conviction. It ain't happening. This stuff rallies to resistance, stops, doesn't make it, stops, makes new lows soon. That's for the last few months. Looking for new lows in soybean oil. Soybean meal has now gotten overbought for the last 3 days. Crossed a little bit above a trend line, but not on a closing basis over here, not on a closing basis over here, not at all. And the little blue marker is the close. Since I changed the color of the bodies, you can't tell whether there's an up day or a down day unless you notice the little blue marker. That's on the close. So now we know the opening was the high of the body. The blue's always on the close of the body. Current tick, blue, near the low of the day. So I think we've topped out in soybean meal. Corn, up to resistance, not quite overbought, and almost an outside down day. All it's got to do is go down a couple of pennies here, or even less than that. Yesterday's low was, give me a break here, 675. Today's low is 7. Woo! One tick above yesterday's low for corn. So all it has to do, low and last right now, we might have an outside down day any second. Okay, well, I'm not going to wait around. It won't turn red because we're not overbought. But I love the outside down day for a sell signal in some way, shape, or form. Next chart, wheat. Buy signal, rode it up for 2 days, got stopped out yesterday. We're starting to slip today, getting back toward yesterday's low, not quite lower than yet, slipping out of overbought condition back into normal. I think this market could make a new low for the trend so far. We did buy the low day and got an extra one later. So we had a couple of good trades here, and that's it. So waiting for more signals. I would have loved to have had a sell signal the last couple of days, but we just didn't get that bearish engulfing. Okay, cattle dropping off a chunk more today. New lows for over a week, not far from the lowest low for months, back to March. And I think it'll get broken. I've got a little marker here for that lowest low. It'll set off an alarm. And I want to point out that the double top formation, since I've been talking a little bit about double tops here lately, had a downside objective measured the way I usually do. That's the yellow dashed vertical line. That's the horizontal from the downside objective, and it hit it almost exactly for 1 day and a fraction. Got a buy signal, made some money. Let's see what happens next. Miss Piggy, overbought, minor reversal, slipped yesterday, more today. Now the trend here is a little ambiguous because it depends on the time frame you're talking about. And I have a pet peeve about people on TV, those market analysts, and it's been me a lot of times, CNBC 3 times. So, well, when they say the trend is up, what time frame are they talking about? The last week, month, 6 months, a year, 5 years, 10 years? The trend is down. They don't usually tell you what the time frame they're referring to is, and that's important. So the trend here for the last since May of last year, over a year, has been essentially sideways. New highs didn't lead anywhere. New lows didn't lead anywhere. Big trading range. Back to the E-mini, low and last almost. Short-term chart, 1 minute. We may make new lows here again, getting down to 10 plus lower on the day. You have a great day. Profitable trading to you.